What is going on, everyone, and welcome back to Explain the Charts. Today, on November 25th, 2025, we are taking a deep dive into Meta Platforms, ticker symbol Meta. There is a ton of news swirling around this stock right now, creating a fascinating push and pull between bullish and bearish sentiment that we need to unpack before looking at the charts. First, the stock has seen some positive momentum in the last couple of days, getting a boost from renewed enthusiasm in the entire AI sector. However, this comes after a very turbulent period for the company following its third-quarter earnings report back in late October. While revenue was strong, the company missed earnings per share estimates due to a massive one-time tax charge, and its forward guidance was seen as lukewarm, causing a significant stock drop. This drop was amplified by investor concerns over Meta's aggressive and increasing capital expenditure on AI infrastructure, with some analysts saying the spending broke the stock. But now, a new, more bullish narrative is emerging, suggesting this dip presents a classic re-rating gap, where the market is undervaluing Meta's long-term, double-digit earnings growth potential. The biggest catalyst right now is the explosive news that Meta is considering a multi-billion-dollar deal to use Google's custom tensor processing units, or TPUs, for its AI data centers. This is a monumental development for several reasons. It signals a potential major competitor to Nvidia's dominance in the AI chip market, and it shows Meta is strategically diversifying its supply chain for one of its most critical needs. This news has sent Alphabet's stock soaring while putting pressure on Nvidia, creating a new dynamic in the AI trade. So, the fundamental picture is one of a company spending aggressively on a future it believes in, while Wall Street debates the timeline for that return on investment, with this potential Google partnership adding a massive new variable to the equation. Now, let's see how all of this drama is reflected in the price action on the daily chart. Looking at the daily chart for the past year, we can see a very clear story. Meta had a powerful uptrend for most of the year, culminating in a 52-week high around $796 back in August. From that peak, the stock entered a corrective phase, pulling back over the next couple of months. The most dramatic feature on this chart is, without a doubt, the massive gap down that occurred on October 30th. This directly corresponds to that Q3 earnings report we just discussed. The price plummeted from a close of around $751 all the way down to an open of $669, a catastrophic drop confirmed by the enormous spike in volume on that day. This event fundamentally changed the structure of the chart in the short to medium term. Let's zoom in on this post-earnings period to really understand the key levels we're dealing with. After that gap down, the price continued to fall, eventually finding a bottom in mid-November around the $580 to $590 level. This area has now established itself as a critical short-term support zone. The price has since bounced off that low, which brings us to the most important resistance level on the chart, the bottom of that earnings gap, right around $650 to $670. For the bulls to truly regain control, they must push the price back up and close this gap. Any attempt to rally that fails at this gap level would be a very bearish sign, suggesting the downward pressure is still strong. Now let's switch to the hourly chart to analyze the very recent price action, particularly the rally over the last 2 days. Here we can see the strong upward momentum that started yesterday, November 24th, which correlates perfectly with the news breaking about the potential Meta-Google chip deal. The stock gapped up and powered through the minor resistance levels at $600 and $610. Today, the momentum has continued, with the price pushing up towards the $625 mark. This short-term trend is decisively bullish, showing that the market is reacting very positively to this new strategic development. The key now is whether this momentum can be sustained to challenge that major daily resistance. Drilling down even further to the 15-minute chart, we can see the intraday action. Yesterday's session was characterized by a strong, persistent climb throughout the day on heavy volume. Today's price action has seen a continuation of that strength, followed by some consolidation near the session highs. This type of consolidation after a strong move is often constructive, as it allows the price to build a base before a potential next leg up. Short-term traders will be watching to see if the price can hold above the $620 level as support during this consolidation phase. Okay, let's pull back to the daily chart to recap and discuss the outlook. The key price levels to watch are straightforward. Immediate support is the recent low between $580 and $590. A break below that would be very bearish and could open the door to a much larger drop towards the next major support zone from last spring, around $500 to $530. To the upside, the first major hurdle is closing that massive earnings gap, with resistance starting around $650 and extending to $670. A convincing break above that level would be incredibly bullish and would put the psychological $700 level and eventually the all-time highs near $800 back in play. So, what are the likely scenarios? The bullish case, which I see as slightly more probable in the short term at about 60% likelihood, is fueled by the powerful new narrative around the Google chip deal. If the market continues to view Meta's AI spending as a long-term win and this deal as a strategic masterstroke, the momentum could carry the price to test that $650 gap resistance. Confirmation of this scenario would be the price holding above $615 and breaking cleanly through $625. The bearish case, at a 40% likelihood, would involve this recent rally fading. If the broader market pulls back or if skepticism about the AI spending returns, we could see a rejection and a retest of the $580 support level. A failure to hold that support would signal that the post-earnings downtrend is not over. Long-term, the story is all about AI monetization. Investors will need to see tangible returns on the tens of billions being invested. Keep a very close eye on any further news regarding the Google partnership, as it could be the single biggest driver for the stock in the coming months. And that wraps up our analysis of Meta. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Always do your own research and make investment decisions based on your own individual circumstances. Thanks for watching Explain the Charts, and we'll see you in the next one.